day-to-day movements in yields have nothing to do with anything other than just market dynamics. Over the long term, yields will reflect inflation, economic growth, wages, earnings, activity in the economy. That's where yields are driven. But day to day, that's noise. Here's what you need to know before the bell. Let's go look at kind of around the market in some other areas. You know, we've talked about the S&P lately and what it's doing. It's clearly on a buy signal, nothing going wrong there. Again, no reason not to be bullish. But I've been getting a lot of questions about bonds, right? Yields have been ticking up, and it was interesting as every day I get some emails like, why are yields up today? There was this piece of data that wasn't good, so why are yields up? Day-to-day movements in yields have nothing to do with anything other than just market dynamics. Over the long term, yields will reflect inflation, economic growth, wages, earnings, activity in the economy. That's where yields are driven. But day to day, that's noise. So don't pay attention to what happens from one day to the next. But we can look at yields. As we've talked about before, yields were very, very overbought. So again, yields are the inverse of bond prices. So for yields to be overbought, it looks like they're oversold on a regular stock chart, right? So this is actually, the bottom half, which is normally oversold for a stock, is overbought when it comes to yields. And that's what we're looking at here is yields, the 10-year Treasury yield. So got very, very overbought. We triggered a sell signal, and that sell signal has been in place. And since then, yields have risen right back to the 50-day moving average. We're challenging that 50-day moving average right now. And again, yields are going to look to be a little bit lower this morning. So we're continuing to just kind of wrestle with this. Have finally worked off that very overbought condition. We're getting now pretty oversold on yield. So again, we're getting pretty close to a buying opportunity to add to fixed income exposure. We're not there quite yet, but we are getting much closer. And again, yields could still move up here to say 4.25%, even 4.3%. Wouldn't be surprising, particularly if we get a fairly strong inflation print that might concern people that inflation's coming back near term. But again, the Fed is slated to cut rates this year. As the Fed starts cutting rates, yields will fall, right? Yields will track what the Fed's doing ultimately. So again, not anything really concerning here at all. And again, this is why we talked about taking some profits back when in November out of the long-dated treasuries. We did that. And so we're looking to put that money back to work here pretty soon. We're not quite there yet, but again, just something to do. Now, this is something that Michael Leibowitz will cover in great detail at this weekend's conference that we're going to have on Saturday. But moving on beyond that, we take a look at some other areas of the markets. While the S&P's been doing fantastic, of course, hitting new record highs, small mid caps have not really done nothing. Mid caps and small caps really pretty much remain very range bound here. This is the S&P 600, so this is the 600 small cap stock index. That really hasn't done anything going all the way back really to April of 22. So again, has traded sideways now for quite a while, but has done nothing. Same thing when we start to look at international markets as well. We keep hearing a lot about, you got to be in international because they're cheap relative to the domestic stocks. Remain deeply in a bear market, nothing going on in emerging markets at all. No reason to be invested there at the moment. Again, that continues to look weak. Developed international markets do fare a bit better, but again, continue to remain very range bound here, not making new highs. So again, when we take a look at the market, right, the S&P's making all-time highs, but even the breadth in the S&P remains fairly narrow to the big mega cap stocks. Same thing for the NASDAQ. So when you take a look at that, it seems like this overall bull market that we're having right now, this breakout to all-time highs, this exuberance, is a little bit sus, as my son would say, because, again, we're not getting the participation follow-up of other markets. That's what you need to know before the bell this morning.